Already got to pick, effectively, do you like the deal that I'm showing you? And then how much do you want to invest? And so really at the end of the day, it's them making their very independent own business decision. We're not involved in that. We were simply saying, here's the information, here's the due diligence we've created and provided and the work that we've done. We're interested in investing. Do you want to join us alongside? And then they made their choice.
My name's Max Gagliardi, and this is Always Be Building. If you're watching this video, take a moment, hit the subscribe button on YouTube, or you can follow me on your favorite podcast app. Hope you enjoy the show. James, welcome to the show. Thanks for coming on.
Yeah, glad to be here. Thanks for having me.
So just basic intro to start out, just your background and what you guys are doing today with Victorum.
Yeah, sure. So Victorum Capital, based here in Oklahoma City. We are a early stage investor, primarily looking at seed and Series A investments. My background specifically grew up in Oklahoma, and not a shock to most of the people that probably listen to this, started my career in energy. So spent really the first 12 to 15 years right out of college in energy, and most of that, where we first met, was at Chesapeake. Was there for a number of years, then became the head of government affairs for OIPA, which is now called the Petroleum Alliance here in Oklahoma City. Did work there for a number of years, and then recruited away by Mike Ming, who's former Secretary of Energy here in Oklahoma, when GE came to town to start the global research facility. And so my role there, though, with a government and kind of business development background, was really to focus on how do we take research projects that the research facility was built to build and try to turn those into businesses. As my partner Matt likes to describe, I was the sales guy that talked for the engineers when you don't want the engineers interacting. But that's kind of my background. Always kind of lived and breathed being here in Oklahoma. Love it.
Is this where you're from?
Yep. Grew up in Clinton.
Okay. Yeah.
Out in Western Oklahoma.
Yeah.
I always like to tell people my passions have been ag and oil and gas, primarily because my family owned and operated a dairy farm. I say my family, my grandparents owned and operated a dairy farm in Sweetwater, Oklahoma. Only if you're in the oil and gas business do you understand where Sweetwater, Oklahoma is versus Sweetwater, Texas. Mainly because of oil and gas operations that are out there. And frankly, very, very thankful for what oil and gas did for the family farm. I mean, it's the only way they were able to survive and pay it off and have an asset that went on to benefit, my family directly. So I feel very, very blessed to kind of grow up here, and we have no real desire to ever leave Oklahoma. We love it here.
I feel you. I'm born and raised Oklahoma, and it's just one of those places that I've traveled a lot around the world, and I know this sounds like, I'm biased or whatever, and I probably am, but it's just such an easy and great place to live. And after going places, I always feel very thankful to live where we live. It's just, it's a great place. And again, we're probably biased, but, and we'll get into OKC. I want to talk about it later and having a startup here, but talk more about this. So you were at the GE role. How was the journey for Victorum? How did it come about? And
and so I want to mention Matt just a little bit, my business partner and managing partner of the firm as well, because I think this story will play. I mean, Matt also grew up in Oklahoma in Stroud. We met at OSU. That's where we both went to school at. Except Matt left the state, which isn't uncommon for a lot of graduates out of Oklahoma. Left the state, pursued a career in private equity, worked in Chicago, Austin, and San Francisco at some of the largest private equity firms out there. And so he had a real perspective on what tech investing looked like. And then, so Matt and I had been having a discussion around what would it look like if Oklahoma actually invested in technology broadly.
Right.
We know what our bread and butter is here in the state. It is, oil and gas from an investment perspective, and we're great at it. And it's really been around real estate. And if you take those two kind of pillars, we're really, really good there. But if you went and kind of asked the investment community here, how many of you have been investing in tech? We've had maybe the greatest tech run in the last, 20 years. How many were involved in Uber? How many were involved in Airbnb? Right. How many had even an effort or any dollars allocated to those buckets? Very, very few. And so it kind of goes to our story of conversations that have occurred over 15 years is how do we then get this community to engage in this asset class of technology investing more broadly. And so for us, it's really focused on enterprise B2B software is where we like to play. And so we have spent the last 4 years building that. What we call our labor of love was teaching people what it looked like. And so previous to where we're at today, and I'll get into kind of where we sit and how we play today, but previously over the last 3.5 years, we've really been focusing in teaching people how to invest in technology. And so we've ran 11 different investments through the state of Oklahoma, $11 million worth of investment in the state of Oklahoma or around the state into 16 different companies. And so the process there is to really teach people, here's what it looks like, here's what it feels like, here's what the mechanisms of investing are, here's how your ownership interest is calculated so that they could get comfortable. And our strategy here is really around, if you show people what good looks like, then when you see it, you'll know how to invest in it and take advantage of those opportunities. So fast forward to where we're at, Victorum Capital, based here in Oklahoma City, really with this idea around early stage investing in enterprise and B2B technologies. We like big data. We like, of course, SaaS applications. Our thing, though, that maybe makes us a little bit different is we're really focused on investing in best in class, no matter where they sit. There's other firms very much focused on being kind of the Oklahoma only type of investor, but that's not really our driver. Our driver at the end of the day is to return capital to investors. And so in order to do that, not much different than an oil and gas operator, they're looking for the best play, the best returns for those investment dollars that they're going to spend. And so that's how we focus on technology.
That's great. How did it come about? You guys just talked about it. When did you make the leap? I mean, I'm always fascinated in the entrepreneurial journey of people have a great idea or they see something like a niche where you guys saw that, hey, this is something that needs to be better served for the state. And the investors here may not have this exposure. Just walk me through. I know people like to gloss over it and, and then we started the company, but was it, you guys had some investors yourselves or you just went out on your own? I think you have a little bit of a unique structure around kind of, isn't it sort of like an investment club in some ways?
It's how we've previously done it. Okay. And so, and that's a function of figuring it out. And I think you'll view, or you probably have a lot of listeners or entrepreneurs you've talked to is like, there's an iterative process here that you go through. And so for Matt and I, it was, yes, we could be investing our own dollars by ourselves, picking deals, two of us, that's it. And that's effectively what we were doing. But to your point, we had built this club model where we were providing access to the types of opportunities that we would invest in that others could then join us. And so that's what we've done for the last 3.5 years. And that's where that $11 million of investment is from us being very, very focused on doing that. And so, it was iterative. And frankly, at the end of the day, it's how do you feed your own family? And for us, that's what it was about. It's we wanted to raise a fund. We knew that's kind of the evolution of where we wanted to get to, and that's where we're at today. But you're right. Like the entrepreneur's journey is, how do I create a business that can, keep the lights on, pay the bills at the house, those types of things. And so we were able to do that over the last 3.5 years, and then had a lot of LPs or people that are LPs today or are investors then that were in the club model say, hey, I like what you guys do. I like the way you think about things. I thought I was going to have more time to pick and choose the deals I wanted to invest in, but as you find out, everybody's busy. So, hey, just put me in every deal. And so you have enough of those conversations. Plus, we had been having conversations with some of our larger family offices in the region. They basically were saying, hey, we're never going to write a little check into it. We need you guys to build something bigger so we can invest larger dollars into that. And so that's where we sit today. Victorum Capital is an investment fund. We're actively raising. That's my little plug here is if you think you'd be interested in what we're trying to build, would encourage you to reach out and talk to us, and we'd be happy to tell you more.
So in the investment club model, it was like you join the club, there's maybe a fee, you guys source deals, you present them to these potential LPs, and then they have the chance to then pick and choose kind of which ones they want to go to. Is that
that's
the way
right.
That worked?
Everybody got to pick, effectively, do you like the deal that I'm showing you? And then how much do you want to invest? Mm-hmm. And so really at the end of the day, it's them making their very independent own business decision. We're not involved in that. We were simply saying, here's the information. Here's the due diligence we've we've created and provide and the work that we've done. We're interested in investing. Do you want to join us alongside? And then they made their choice.
It's interesting, like the point you made around LPs being busy and saying a couple things. One, you said that they don't have the time. Maybe they're busy. These guys, whether it's a family office or a high net worth individual or someone who's a professional but wants to get exposure, everybody's got stuff coming up. So when a deal comes up, I'm assuming maybe that person's on vacation. Maybe they're in the middle of closing another big deal. Maybe they've got whatever going on. It's probably harder to get that focus and attention for them to have that more active role and where they want to direct the funds. I could see that. I could see that playing out. I maybe wouldn't have thought of that, but as you say it sounds intuitive that people like that would be busy. That's interesting to me that they were wanting to gravitate more towards just a fund model where it's like, hey, we trust you. We know enough about you guys now to where, hey,
yeah, I think that's a part of it. I think it's true in all businesses. You have to go through a period of time where you're building trust and creating value. And so for us, that's 100% what the previous 3.5 years was. Is you're building a track record effectively of here's how we think about investing. Here's what we like to invest in. Do you like this too? And then they get to make decisions. I mean, and then the FOMO kicks in. Like, it's gone. Right. I wasn't paying attention. You guys closed that deal. I wish I was a part of it.
Yeah.
How do I go get a part of it after? So
that's interesting. So you said that the strategy was the more of the tech side, maybe SaaS businesses, but it seems like from the stuff I've seen, I don't know if all your investments that you guys have done or placed have been public, but I've seen a number of them come across where sometimes it shows you guys as one of the capital providers. Is it all technology or is there other stuff in there as well? I feel like I've seen.
Yeah. So historically, we basically said we could do anything in any market. And so previously we'd looked at all sorts of deals, hardware companies, software companies. And that's kind of over the last 3.5 years. Pure focus today, though, is B2B enterprise technology companies. And so we're not going to be doing any more hardware. Sorry for the hardware developers out there. It's not going to be a focus of ours, and that's not because those hardware companies can't go be super successful. It has more to do with, at the end of the day, for our LPs and the people that are investing behind us, they want to know what's your thesis, right? And so we're clearly defining these are the types of companies we want to go to, and we have our reasons. I mean, frankly, I think they're more scalable. The cost of iteration and progress is cheaper on technology. They're not as capital intensive as a business when you think about them long term. So that's why we're really focused there.
Whenever you were doing the investment club model, how did you, once you placed an investment or placed some LPs in an investment, was it then on Victorum to track and update those LPs, or did you just kind of pass the baton to that management team? How does that work?
No, we still play a very active role. That's kind of our role as an investor and co-investor alongside of them is, we're telling everybody that we're going to continue to do what we need to do to be valuable to the company. And so one of the things that we've always prided ourselves in now and previously is being a strategic investor, being somebody who's going to bring real value to the table. So whether that's thinking through, how they're going to put together the next round of capital, looking at their business model itself, how we could, iterate or change either how they're generating revenue or how could they generate revenue in the future, or driving real customers to them. One of the values of spending the 3.5 years we did previously in the club was we built this tremendous network. I mean, at the end of the day, we had 50 plus 60 investors in 9 different states. So we had really broad reach, really smart individuals in all kinds of different markets that were doing, making investments alongside us. And so at the end of the day, when you move into the fund and it's you making these capital decisions, we still have access to the network. And so you're trying to drive real business and real business value to the companies you invest in. And so we hope that's the value driver that we're pushing towards them as well. But we take a very active role. We maintain, the quarterly or monthly or weekly cadence, however much the company needs. And I would tell you, we try to be so value add that the company knows that they can reach us on a cell phone at any time. And so at the end of the day, that's where most of our business happens, via text message when people are asking questions or in the throes of trying to run their business. And so we try to make ourselves just as available as we need to be.
Well, on the raising capital side, did it start with just 1 or 2 LPs? What's the process of finding the LPs? Is it people you guys already knew? Is it just kind of word of mouth? What's the typical LP look like? Is it across all different types of groups? Is it, like you said, family offices? But just talk more about the capital raising process and what that looks like for you guys.
Yeah, I would say we're similar to other entrepreneurs you probably visited with here. It's hard. Raising capital is always difficult. I think you have to, you got to start with the big funnel and, work those individuals down. I would tell you, for us, it has really been about starting local. What are the actual business relationships we already had, and those people that kind of trusted us from the start. They knew our backgrounds. They knew what we had done previously. And so kind of our core group of LPs have been, relationships we've had for, 5 or 10 years now at this point in time. The other side of that, though, is taking a very long-term approach to relationship building, about growing your LP base. So for us, we know that not everybody's going to be ready and able to invest today when we say, hey, I've got this opportunity for you to invest in our fund. In some cases with our LPs, we've spent 3 and 4 years building that relationship for when the day came and the opportunity was right. We had some alignment and they were ready to move forward with us when we were ready to move forward with the fund. And so, for any entrepreneur, I'd say, you better have a long viewpoint of it. If you think you're going to raise all the funds for your company or your business, or for us in the case of the fund, if you think you're going to do it in 6 months, you better double your time. And I think on average, most funds today are spending 18 months raising their funds. And so, for us, we're trying to do it in 12. And so if you're a early stage founder worried about how you're going to raise money in the next 3 months, probably a sign you should have started 6 months ago.
Sure.
And so we take a very long relationship-based approach to the way we do things. You still got to start with a big funnel of 1,000 people and then work down to the ones who align well with your strategy and what you're trying to do. And that's what we've worked on.
We've raised a small fund for some real estate stuff we did, and we were relatively picky around LPs, just given like high net worth people sometimes can be big personalities.
Sure.
It can be a challenge. You never know. Some guys can be the most laid back guy and he's just like, hey, I trust you guys. I see the vision. Other people could be very micromanagey around as an LP. They want to, be a little bit more high maintenance. Do you get experience dealing with big personalities and people like that maybe have high net worths, or just how has that been interacting with these, whether it be family offices or just these LPs?
Yeah, no, I think I would tell you, you need to raise money from people that you trust and want to work with.
Yeah.
Like that's kind of an initial one for us. What you're saying is not untrue. I think it's true of all of us, whether you're stroking a, $250,000 check or a multi-million-dollar check, there's personalities involved in everything.
Sure.
And people, at the end of the day, I maybe wouldn't even phrase it in as a personality issue. It's just people, they're putting risk dollars out there and they're concerned about those. I hope in our case that we've just built relationship at the end of the day that they trust what we're doing.
Right.
The other side the thing I would lean on, and we actually lean on the companies that we talk to as well as people who are getting our checks, is like, if you communicate, you'll solve a lot of these issues.
Sure.
And so for us, we've always had a big desire to, as best we can, over communicate the progress and structure and how we're putting these investments together. And that seems to keep that at bay. But then the other side is like, just continue to provide value to your base. And if you do that, you'll be in good shape.
So I think like over communicating is probably a good thing, or at least we've noticed that, I think. And being invested in some companies too, you always just like to have that good line of communication. You want to, being on the LP side, for me, there's like certain things that I really want to see. They're just like little things that as a business owner, I'm kind of like, hey, I want to see like cash on hand and like what this, sources and uses and like just certain things with the business as a startup that as I think through it, being a founder of some companies, I'm kind of like, these are the metrics that are important to me.
Right.
And I think that if you can like express that to the team, then they kind of get in that cadence of knowing, okay, this is what these people want to see. I think the other thing is that being on the other side, where you have investors, it's just maintaining that communication and being pretty consistent with, how you're interacting with them. And I wonder with you guys and having these, a lot of private company investments, it's not like a stock where you can see it day to day what the price is. It's not like a real estate portfolio where maybe you can say, hey, here's our occupancy and here's what our average rents are. How do you think about tracking that progress along the way with these companies? Is it hard to do because they are private, or how do you guys view just like those metrics as they go and relaying that to the LPs?
Yeah, I think kind of two questions in there. The first thing I would say is, one of the things we always harp on with our companies is that due diligence is a part of due diligence. And what we mean by that is a company that comes in that has well-defined goals and objectives around what they're going to hit, whatever their KPIs are for the company, we're going to spend real time understanding how that drives kind of the flywheel of the business moving forward. Once you start to understand that, you can then document, okay, you told me when we were going in to make this investment that these are your KPIs. And I see that clearly identified in your business model. Here's how you drive to those KPIs. And then when I get to your first quarterly update, when you provide me that, I expect those KPIs to be front and center of what we've agreed to. And so you kind of march towards those individual items. And I think if you do a good job communicating, like, here's what I'm investing behind, here's what you're telling me you're going to do. And if you do those things, we'll have alignment. And I can then take those set of KPIs and those financial pieces and I can drive out, okay, what do I think my multiple on this type of investment will be over time? And for us, to be fair, I'm not looking at trying to do 10 to 12%, IRR. It's not the way I think about these businesses. I'm looking at in a 5-year time horizon, or 3 to 5 year time horizon, can I make 10 times plus my money? Right. And so you have to quickly be able to escalate that business. And so my dollars going into your business needs to drive real bottom line outcomes. And so I can then fairly quickly project, okay, if I'm going to be at, $1 million of ARR this year, I need to be going to 2.5, 3 million next year. I need to be at 6 million the year after. I need to go to 15 the year after that. So there has to be kind of a natural escalation you see in those companies, or else it's not investable for us. Doesn't mean you don't have a great business. It's just not investable for us. And so I would tell you, we spend a lot of time. I think we are probably as thorough as anybody in the due diligence piece. And I think that goes to having clear expectations of what we expect the company to do, and then driving our investment dollars into that thesis that we both agree these are the objectives that we're going to hit. And that's how we kind of pencil out, at the end of the day, how do I drive returns for investors? Right. And that's what we're looking for.
That's good. As somebody that's, it can be confusing. I've been in the raising money for other stuff world, but I've never really done like a tech type of raise. And I see, and I know a lot of people listening may not have either, but you see things like Series A, Series B. Just talk about the structures as these founders. If somebody who's maybe a founder who's thinking about raising money, what does it look like when these companies go to raise money? Do they sell a minority interest in the company? Are there different share classes? I know it's probably not all the same every time, but just walk through some of the structures that people could expect if they were thinking about raising money for their startup.
Yeah, there's a lot that goes into that. I would tell you that in Oklahoma, it's probably not the best to get caught up in what we call the round, seed round, Series A round. I think it's important to remember where we sit. We describe Oklahoma as an off the beaten path market. Yeah. We're not a traditional tech hub. And frankly, we love to invest in off the beaten markets. And I'd love to kind of get in why we think there's an opportunity there. But a seed round in New York City or a seed round in San Francisco, a seed round in Austin, all look probably different than what a seed round in Oklahoma looks like. And so I would tell you, don't get super caught up in is this a seed? Is this a Series A? Is this a pre-seed? How do we kind of view that nomenclature? I wouldn't get too wrapped up into that. There is kind of a natural progression. As you think about the rounds, pre-seed, I'm pre-revenue is how I tend to think about it, or I'm very early kind of in the revenue game. My seed round is kind of, all right, I've got real revenue, real traction. Some of that's starting to flow. It's kind of my second round. Maybe the first pre-seed round is friends and family. I've raised a little bit of money. Seed, I'm going out to raise $1 million or $2 million, or maybe up to 3 or 4 into that round. And then Series A, I'm $5 million plus, right? And I've got $1 million of ARR coming into the business. And so new capital is really going to drive that. In terms of structures that we see, we tell our people we're not picky about how we want to do that. They have a safe note mechanism, a simplified agreement for future equity. That's very, very common in the early stages. As you progress forward, you tend to see a lot more, what we call a convertible note, and then you'll move into a price round where the safes and the convertible notes are a little easier to put together when valuation is a little tougher to identify. As you progress your company, you're going to move into more of a price round where an investor can look at you and say, okay, I see what your bottom line revenues look like. I can give you a multiple on that money. Here's what I value the company at, and I'll invest at that dollar amount. And so that's the right way, I think, to probably think about those different rounds. I think a lot of times people get too caught up, frankly, in the nomenclature of what we call them. Just think of the underlying business fundamentals, what allows you to invest and protects the investor. We look at those notes a lot as what are the protection mechanisms, whether that's a discount rate on the next round, an interest rate tied to the note that you're signing. Those types of mechanisms are there really to provide protection to the investor.
And this is more my ignorance around it, but it's like, are they selling down a minority stake? Is it just a pin? Is it a majority stake? I mean, like I know in private equity, the founders own just a very tiny sliver.
That's right.
Right. And then like in real estate, maybe you're a GP and you own 10% or 30% or whatever, but you got these LPs that still own the majority, but you get a fee and then they get a back end. How do these structures, like along those lines, how do they look?
Yeah, so we are typically minority investors. Okay. We're buying 10% or less of the company. Right. Now, the reason is we think they're worth or could be worth, big multiples on our money. So we're trying to keep incentives aligned here where we can still go make 10 times our money, and that the founder who's built the company is really motivated to go be $100 million plus company.
Right.
And so we tend to be minority investors. I think, in our opinion, that's smart. It's probably something that I wish more Oklahomans would kind of get out of this. I got to invest and I have to own it in order to keep some level of control. In most of the cases, especially in the places we invest, the local investor is not the smartest person to be a majority owner anyway.
Yeah.
And listen, I think there's a ton of smart people, but there's a bit of understanding your own limitations and time and commitment of what it would look like to own a majority interest in a company. And so for us, we're trying to convince people we're buying a basket, of investments through this fund model, like call it a mutual fund of venture investments. Your goal is to own minority of a big bucket here that can all return 10 times your money.
That's good. What about, you mentioned earlier you wanted to get into looking at the off-market stuff, why you see value there. Explain that opportunity to me and why that excites you.
Yeah, and so this is a little bit, or at least in my opinion, what I would describe as some post-COVID realities that have occurred. Mm-hmm. So before, if you would have went back, anytime out, kind of 2010 to 2020, and it probably goes back way further than that. If you were a upstart, technology company based in Oklahoma, you had to go to New York, to Boston, to San Francisco, to Austin to try to raise money. That is where all the capital sat. And it's still very much a big player. In the post-COVID world, if you are a startup in Oklahoma, you no longer have to sit in San Francisco to raise money. You are literally a Zoom call away from every major investment company out there. Well, that is a big benefit to what we consider ourselves kind of a startup investment firm here in Oklahoma City. I'm now competing at the same level as the guy that sits on Sand Hill Road in San Francisco. I am just as attractive. My cash spends just as well. Yeah, right. And in many cases, I view we're much more strategic to the types of investments we try to do. We have some expertise, or our network has some expertise in the area where you're trying to be successful. And so the post-COVID world has kind of democratized not only how investors can get access to new opportunities, it's democratized where the builders can sit and build their companies. In my opinion, there's no better place in Oklahoma City right now to be building a company. And there's a lot of advantages and different reasons why. One of the main ones being we're still a very low-cost place to live and operate. And if you're trying to hire people, especially in a remote world, there's no reason a big chunk of your company couldn't sit in Oklahoma City. I'm not saying that's necessarily where you'll end up. And we don't make any restrictions on where companies sit at the end of the day. They need to be in the place where they can be the most successful, and that's what we're concerned about. But boy, in a post-COVID world, I'm a Zoom call away.
Yeah.
Right. From having a conversation with somebody, clear across the country.
For sure. Is it any industry specific? I know you have the energy background. I've seen some of the investments that you guys have done that seem to bounce around between various industries. They may still have that common theme around technology in the SaaS element that you mentioned, but is there industries that you don't like? Are you agnostic to the industry? Is it just have to fit the metrics? But just talk about what industries excite you, what you guys are focused on.
Yeah, I would tell you we're kind of a generalist fund. Like we're not specific to any particular industry. I will tell you, when we sit in Oklahoma, and Max, this is a credit to you and all the other guys that are running around here. It does no good for me and Matt to go try to compete against you and the 10 other guys or 15 other guys that could all raise money around an oil and gas deal in Oklahoma.
Sure.
Could we do it? Absolutely.
Yeah.
Got the skill set. Not opposed to doing that. It's just I think you have to pick and choose kind of where you want to compete.
Right.
And in Oklahoma, it doesn't do me any good to go compete in the market where, frankly, we're already experts. You know, I can run through Oklahoma and Texas, find a lot of guys that are really good oil and gas investors. Doesn't do us a lot of good to try to compete. In fact, we're trying to be a different avenue there. We're trying to get people out of the oil and gas commodity risk and show them what some exposure to technology would look like. And so generalist in terms of the types of deals that we will do. We've had some good success kind of in real estate, prop tech. We've done a number. We haven't not going to do a bunch of biotechnology in our fund. That's more of a function of neither of us are doctors.
Right.
Like I love science. I'm not going to be that guy.
Right.
And so it's also knowing kind of where you can be competitive and provide value. And so we're not going to do those two.
Sure.
Yeah.
Sourcing deals, like it's always hard. I feel like, and I've done it for my background in oil and gas. Real estate's a little different. Real estate, there's just always a new property or a new thing that's out there because it's just real estate so broad. But oil and gas, it's very basin specific, asset specific. You kind of, everybody sort of herd mentality knows, hey, the Permian's a great play.
Sure.
People want to look in this area. Or if you're trying to buy a midstream asset or an upstream asset, if it's any good, it's going to go to a widely marketed process. I've been really fascinated lately with just like the small business acquisition world. I follow a lot of people on Twitter in that space. I know there's a lot of broker type companies that push out deals all the time. And it reminds me more of real estate than it would like oil and gas, right? It's kind of like concentrated. You sort of know who the players are, where the basins are. How do you find these deals? Is it through the relationship side? Do you come across things that are widely marketed? Just walk through the discovery process of sourcing these deals.
Yeah, I would tell you it's just as difficult as, probably when you see all the broker deals kind of flowing through, like they're all different industries. You really don't have an idea of why that particular company could win or should win. You can probably just look at the finances and decide if it makes sense or not. In the tech world, I would tell you that, this is a function of doing the work. There is no shortcut to sourcing opportunities in tech. So I would tell you, like, we are very aggressive kind of in the incubators and accelerators and the university programs and all of those things. There are great programs out there that are built and being built, especially in the state of Oklahoma right now, but they're all over the place. Texas has Capital Factory, there's Y Combinator, there's Techstars Portfolio Group, there's a group out of, I believe they're out of Minnesota, and Generator. Like, there are these big groups that are trying to accelerate technology in the U.S. And so we're in all those. And so you got to look at a lot of deals. You got to kiss a lot of frogs, right, to try to find a prince in that mix. And so we do that, and that's a lot of hard work. The other side is like similar to how I described building relationships with LPs. You spend a lot of time building relationships with other firms. And so we do that. We spend a lot of time talking about portfolios, places where our portfolios may be a fit to somebody else, and vice versa, how their portfolios may be a fit to us to try to find, the right opportunities. And so we always tell people, I bet you I look at 2,000 deals a year, and we make, less than 10 investments a year. And so you got to look at a lot before you really kind of nail down what you're going to invest in.
Do you think about like trying to play a trend? Maybe you see an industry that's behind technology-wise. You look at an industry and you say, this industry is a growing industry or it's a profitable industry. It's been around for a long time, but the trend is that it's been a little bit behind on tech. Or do you look to see something where maybe there's already existing product that's out there, but you say that guy's entrenched and it's incumbent and they're slow and someone could do it a lot better or twice as fast or twice as good. How do you think about trying to identify? Because I know you said there's a lot of different resources, but just any other thoughts on just identifying these and how you guys view it and what gets you excited when you see something?
Yeah, the short answer is yes. Like I'm amazed every day when I meet a founder that says, "Oh yeah, no, this is how this process is done in this industry," and you're like, You mean to tell me they still send a fax, for that? And that actually still happens is like perplexing. Or then to your point, to walk into a company and say, oh yeah, there's this 10,000 pound gorilla. And then you go review what that gorilla does and how poor the user interface and the experience is to that user. And you're like, if anybody can do this a little bit better,
right,
you're going to win this market and you're going to have a real opportunity to disrupt or to be acquired by that company because they realize that they've slept on product development for a long time. And now people are starting to disrupt their business. I think the one thing I would tell you that call it a bit of a trend in the market right now, but something we're paying a lot of attention to is how machine learning and artificial intelligence are going to apply to conventional technology stacks. I mean, today, like there's a lot of fear about what artificial intelligence could be, but I'm telling you, every day I see 10 different companies, and it may not be 10, but I'm seeing a few companies a day that are talking about, here's how we're using artificial intelligence to do these processes. And I think we're going to see a lot of that. We're going to see improvements in the overall process of transacting business. And artificial intelligence is going to play a big, big role in that. And so I tell you from a trend perspective, we're paying attention there. I know you have a kind of an interest in blockchain and Bitcoin as well. And I would tell you, I think that is still figuring itself out. I think there's going to be some really great use cases with blockchain technology that is far beyond what a cryptocurrency is. They're going to have disruptions in the marketplace. And we're seeing those, making some investments there. And so we're still really excited about the tech.
Yeah.
You just, I mean, with anything, you got to be skeptical. You have to validate. You have to work with your networks to understand how those processes really work, and then make sure the company, that they actually do what they say they do.
Yeah, for sure. Is it ever one of those deals where if a company, I talk to people, I have friends and people that come to me with ideas for startups, and it's like, hey, I've got this idea. No one's ever done this before. And, and I'm always kind of like, that's a little bit of a red flag because if no one's ever done it before, not that you can't come up with some brand new thing that no one's ever thought of, but to me, it's always like if there's somebody doing it already, that's actually kind of a good thing. I know in these network effect businesses, that can be a bad thing because the winner takes all maybe. But when you look at stuff, do you look to see, is there something else out there like this? Or if there's somebody truly with a unique idea, is that a red flag to you like I mentioned, or does that turn you off at all?
Yeah, I don't know if it's a red flag. And I would tell you where we invest, there's kind of there's a turnover mark. So and it's keep this in mind too. We typically never invest in anything pre-seed. So something that's pre-revenue that doesn't have any customer traction. We really, at the end of the day, I'm looking for customer validation before I make an investment.
Right.
And so, I'm running a little pilot with you. It's somebody saying, here's the contract, right? I'm going to commit for the next 2 years for a longer term contract with this particular piece of software. And so that's really the things we're looking for from that piece.
Sure.
I mean, it probably gives you a little fear if somebody said, oh yeah, we're the only people that have ever looked at this or done this. And you there's kind of like, it'll back of your head, you don't have any competitors. Nobody's doing this.
Yeah.
And you see it every once in a while. But I think the only thing you can do there is kind of chase the rabbit and figure out where the rabbit leads. And if there's something really there at the end or not, and you got to figure that out.
What about the people side of it? What do you look for in founders? What gets you excited about a team, whether it's one founder or a team of founders? Are there any red flags with founders, people that maybe have a great product, but maybe the team isn't the right fit? But just talk about the people element of making investments.
Yeah, we spend a lot of time evaluating the team. It's one of the things at the end of the day, you have to have a certain level of faith in the team to move the ball forward. And so, and I would tell you, it's real easy to look at a company or the longer we've been doing this, it's even easier to look at the company and say, is this a founder that moves the ball forward or not?
Yeah.
There are some that are constantly kind of what I would describe as stuck in the pivot. They've never been able to truly get product market fit. They're not getting actual traction with their customer. That's not a kind of a slam on the founder. It's a bit of function of organization and their ability to kind of clearly define and listen to the customer. So that's kind of maybe the downside of what we see. On the positive side, the founders I love are, I always describe them as sales-focused founders.
Yeah.
They're guys that know how to keep the lights on at the end of the day.
Right.
And they are insistent on identifying what the customer's pain point is and building specifically to it so that that customer will pay them. And so they are the guys that every time you're on the phone with them, we just had this conversation with a customer. He said this, we're doing this. He signed this contract. It brought in this much revenue. And then they find ways to repeat and replicate that, and they evolve into their product market fit really, really well. And so those are the type of the founders we tend to look at. At the end of the day, too, it's like, who's willing to hustle? And I mean, that's probably an overused term in the entrepreneurship world, right. But there is a bit of reality to who's doing the work to make sure they bring in enough money to keep the lights on at the end of the day. And so we're looking for some of those people as well. I'll go back to the diligence as a part of diligence as well. Those investors tend to be super focused on, product market fit. They're very well organized in terms of, I know what my financial model looks like. I know what my margins on the product are. I know how much I'm spending to acquire the customer. They're spending all of that kind of really valuable time understanding the metrics around their business so they can get on a call. They know how to negotiate. They know how to get deals closed at the end of the day.
Yeah, sometimes you run into these kind of mad scientist types that are really smart, really brilliant people, and they've got a great idea or they've invented some kind of great technology. But to your point, kind of the failure to launch piece, I've seen it in the oil and gas space. And a lot of times in there's a high capital component. So it's not truly like tech, but it's like, hey, I've invented this new process that does this thing. And this could, convert gas to liquid or whatever. There's always like these like ideas people have. And this is this brilliant guy. And you're like, yeah, but you've got to sell it. It's got to be, There's got to be a market there. The customer has to want this. And you've heard people talk like, Naval is a guy that I really follow in the tech space. He's like, you typically have maybe like a founder that's like the technical guy and then the sales guy. Mm-hmm. And if you can find a guy that can do both, that's kind of the jackpot. Right?
Yeah, those are unicorns.
Right, that understands that stuff. What about the flip side of that? A guy that's over sales but can't actually do the technical. Do you run into that too?
Yeah,
like he's got the great story.
You see it like they're the consummate salesman. Yeah, I mean, everything's always flashy, but I think for me, like, that starts to stick out pretty quick when the ball doesn't move forward. Like, oh yeah, I've got 15 conversations going with all these different people. How many sign on a contract?
Right.
Who's paying you for the product?
Right.
Where's the product at today and what's being developed into the product? Oh, I'd have to get my CTO on to tell you more about that. It's like, and there's probably some reality that happens, that there's true, very kind of bifurcated roles within an organization where, the CEO may very much be the sales guy, the front of house spokesman, and they have to have a technical person that runs the technical side. Sometimes that works really, really well. Probably more where we start to invest, frankly, is they have a more fully developed team. When you're early, pre-seed, pre-revenue, it's often one guy doing all the work. And so they've got to be able to kind of juggle both technical and kind of sales processes at the same time.
That's a good point. Well, what do you think about just like how much do you guys pay attention to the macro, the economy, everything that's going on, interest rates going up? How does that affect you guys, if any? Do you look at these broader trends? Is it like, hey, if we go into a recession, what industries do we think will be well positioned to capitalize on that? Or even like broader trends like the work from home or just things like that. But just how much does these macro trends influence the way you guys do business, and how much do you think about that stuff?
Yeah, no, I think they play a massive role in what we're doing. Like, we're very mindful, especially of interest rates right now and kind of the macro environment. When interest rates start to go up and there's kind of this continual talk or churn of a potential recession, you can't help, especially on the LP side, you can't help but have those LPs start to kind of, pull their horns in. They're not investing right now. It's a much harder, tougher environment to raise capital. And then I think you're seeing some of the ramifications in this world specifically. 2021 was a bull market.
Yeah,
plenty of cash in the systems. A lot of companies overvalued, raised money at really high valuations. Fortunately for us, where we invest, if you've been watching like the public market comps, some of these companies raised, Series E and F rounds, really big rounds at multi-billion-dollar valuations that are taking massive haircuts. Currently, we're fortunate we're not investing that late in stage to where our particular companies have had that type of valuation fluctuation within them. But it's definitely having an impact in the market. I would tell you we view that as this is a buy time for us.
Yeah.
Valuations are shrinking. Our dollar goes a bit further right now with the companies that we're investing into. And so we're probably the opposite of where some of the larger LPs out there and the really big funds are. We're looking for buying opportunities. We think this is a time to really, kind of plant a flag and buy companies at a really great valuation that can return big capital to investors.
Yeah, I would tend to agree. It's the times when people are fearful and valuations are down is when you want to go in. How's that proxy, like these public market comps, these bigger deals, does that flow through to the markets and the companies that you're looking at? They're like, well, this company over here is public and they got this, or their multiple is this, or their valuation is up here. How much does that play towards what you guys are doing? Or you're kind of like, look, this is how we view it. This is our metric. We're going to base it off of this. It doesn't really matter what how much does that play to you guys?
Yeah, specifically, like we think about it, but we don't model it. And so, spending time in Excel and looking at companies' financials, when you start to build out that forecast of what you think the company can do, we are on purpose haircutting the tar out of what the upcase scenario looks like and then putting a very low multiple on the company. And once you do that and you start to run those metrics through, if you can still return 10 times your money at a 4 times multiple in 5 years, you feel really good about where the company could be, because that's below even what the market comps are doing right now. So we really feel like we do a good job of kind of making sure, even in the low case or base case scenario, we can return a lot of capital to investors, and we're not chasing a large multiple for really any of our companies.
Can you talk about any investment that you guys have done? I know some of them are public. Can you pump any of them and say, hey, we invested in this group, they're a great group, or just talk about the reasons why they're attractive, or is it all private and confidential?
Yeah, we tend to hold all those pretty private and confidential, just to let the company talk about themselves in that way. So I'll hold that. We love them all, especially I would tell you right now in terms of Victorum Capital specifically, we are in a situation here in Oklahoma City where the pipeline has never been as good as what it is right now. And a lot of that goes to we spent 4 years building this pipeline. And so the quality, the types of technology we're seeing in the industries we're seeing them in are absolutely phenomenal. We think it could really make a big difference for investors here.
You mentioned AI earlier, and I had this in my notes. How is it overhyped? Is it what it's said to be in terms of the things that you've seen? You're seeing people throwing it in as a buzzword on a lot of stuff right now. Is it really, is it too early to, in terms of where it's at? Or is it truly hitting that sweet spot where you think it's going to be pretty disruptive? Just your thoughts on AI and what you guys are seeing for some of the companies you've looked at.
Yeah, I don't know if it's possible to say both. Have you spent any time playing with it?
I have played with like ChatGPT and some of these things, and there are aspects of it where I'm like, man, this could be really powerful. And even within our business, and maybe I'll talk to you about it offline, I have some ideas on how it could be used. But I also just see it as like sometimes kind of like a buzzword. And really before this recent trend that's emerged, really the ChatGPT stuff, I would kind of roll my eyes sometimes, and 3, 4, 5 years ago, because you'd be like AI, machine learning, and you're like, okay, what is this really? Is this actually a thing, or is this just a buzzword they're throwing in? So I'm just curious it seems like now that it's almost like you have to have some kind of AI thing.
It's definitely a buzzword, right?
I mean, like how much of it is real and how much of it is playing on the trend, do you think?
Yeah, I mean, and this makes sound like a cop-out answer, but I think the answer is both. I think 100% it is a bit of buzzwordy right now. We're seeing DEX the same way. You're like, okay, your company's .ai. What is your AI?
Yeah.
And you're like, oh, well, we don't really have it. We're working on it now. It's like, oh, okay, you're not there yet. To be fair, like AI is brand new, I think, to all of us. So we don't have a really great grasp, I think, on just how impactful it can be. I listen to a lot of podcasts as well. I think you can be equally scared of what it could do, but still understand that its impact on. My hope is that it can kind of skirt that boundary, that will be smart enough to keep some guardrails on the system, to where it can be very, very beneficial to business and how we live our lives, without destroying all of the careers that are out there, because AI does it so much faster.
Yeah.
And I mean, and there's a legitimate case that a machine can and often does do things quicker and faster than what a human can. And so we're going to see that start to play out. But how will we keep the guardrails on? I'm not 100% sure. Right now, we like it. We're paying attention. I think my concern, at least, me using OpenAI's ChatGPT process is still only goes out to 2021 information. Like there's a bit of a lag in the system still.
Sure.
Maybe that's a good thing for all of us right now
Yeah.
that there's that lag, but what does it start to look like when you use, what some of these people have been able, multiple AIs talking to each other. I think that gets maybe a little bit scarier that we just need to be thoughtful about the way that technology rolls out.
Right.
But I mean, we look at companies every single day that I think are using it in pretty unique ways to solve real problems and speed up process.
Do you have like companies that aren't using it that you've invested in that you're like, hey, you guys need to be, you're talking to them about maybe this is something you should look at, or are they probably already doing it?
Yeah, I think hopefully all of our companies have already started having those discussions, but if they haven't, we've had them with them is, how do we think this impacts your business?
Right.
And in that case, almost all of them have kind of been on the trend for a couple of years. I mean, it's probably the beauty of most of these technology founders is they've been thinking about this stuff before we ever have. But in fairness, like even the big guys don't have it all, figured out just yet. I mean, Microsoft's investment into OpenAI was a big tell that, they're trying to figure it out too. But I don't know if you've written an email in Outlook recently, the predictive text is pretty good.
Getting pretty good. It's like full sentences now.
Yeah.
You start to type it and it's like, well, it is what I was going to say.
That is exactly what I was going to say. So it's pretty impressive.
What about just like the OKC scene? You and I have been in Oklahoma City for a while. It seems to sometimes ebb and flow with the oil and gas industry as it's up or down. I have my thoughts on it, but just kind of the life cycle of where OKC's at. You still feel like it's on a growth trajectory. Just your thoughts on OKC.
Man, I love it still. I think we're still trying to hit our stride a bit. I think the MAPS program specifically has just been a big, big win. Regardless of how you feel about the tax impact. At the end of the day, nobody likes their taxes to go up, but we all enjoy the benefits of what all the things that have been added because of MAPS. And so we're still very much bullish on Oklahoma City. Commute times are low. Like we're selling our companies every time we get a chance to talk about Oklahoma City. Like we think it's still a really low cost place to operate. You can buy a home here. You can live in a very nice home here compared to where you can live in other parts of the country. So lots of advantages to being here and being supportive of that. In terms of the tech ecosystem, I think one of the things we would tell people is Oklahoma City is still figuring it out. We're building systems and processes and incubators and accelerators and trying to do all the right things, which we need to do. But it's early days. And so the community can't get upset. Like this is one of the things that we would tell everybody is we have to remember that Austin is probably 30 years ahead of Oklahoma City in terms of the tech development.
Yeah.
Like we don't need to be disappointed or mad at ourselves because we're not Austin or we're not some other community at this point. You just have to have a reality of where you're at in the cycle. We've very much been a technology forward community. Just look at what oil and gas has done.
Right.
And the entrepreneurs that have built phenomenal oil and gas companies here. So we definitely have the ability to build and create great technology companies here. We've just done it in another industry. And so I am personally excited to see, what is the next iteration of the young engineer sitting at Paycom today? What's he go out there and build that I get to invest in the next 5 years? Or the guy that leaves Continental or Chesapeake or Devon or wherever they sit today as a data scientist and they say, you know what, I've got this other thing I really want to go pursue and build. I'm really excited about what that next iteration of it is. We're not going to be Austin tomorrow. We're not going to be San Francisco tomorrow, but we have to have a long-term view still to what the community can be. And we got a lot of advantages for us now. I think it's a great place to raise a family and grow a business. And so very, very bullish on the city.
Yeah, me too. It's a great place to live, like we mentioned at the beginning of the podcast. I wonder how much now that it really matters. I used to think where you are located in terms of where I was going with that thought. Because I used to think pre-COVID, that Chesapeake campus, I know there's rumors of them trying to sell some of the buildings. I was like, man, this could be like a tech company's amazing campus. Now with the work from home thing, I just don't know. I know there's still companies relocating to Austin or Texas is pulling in a lot of people. But I'm just wondering how much, does location even really matter, especially in the tech space, if you're trying to get good talent, that ability for them to work from wherever. Is that what you're seeing with your companies, or a lot of the companies you guys invest in have pretty open kind of work remote policies, or a lot of them still at a brick and mortar location where they want everybody together? Just what are your thoughts on how geography plays in nowadays?
Yeah, they almost all have some type of remote or hybrid environment.
Yeah.
And most of our tech companies are even working with tech development in other countries, right? So they're finding ways to source talent however they can get it, wherever it sits. I do think we're going to continue to see an evolution of work environment. It's probably not a fully remote environment like we kind of was talked about early on. This is what I would describe as a hybrid, 3 days a week, 2 days a week. I think there's personally think there's something valuable to the team seeing each other in somewhat regular cadence.
Right.
Just the flow of business is, in my opinion, a bit better. That doesn't mean that some companies won't be fully built remote because they put a system in place that works well together. And those, if you've been remote first from the start, it's probably a bit easier than kind of building or going remote after 2020 and the pandemic. So, that's kind of what we're seeing in that space.
For sure. We do the 3-day thing here. It's Monday, as you know, and there's not really anybody here. So it's people love it. They want I personally like it too. Selfishly, my wife is like, she loves me being, I usually come in on Mondays, but Fridays at least I work from home, which is a huge benefit. I think it's going to continue. But to your point, there's some valuable, everybody I think acknowledges, or most people acknowledge, especially business founders. I feel like they acknowledge that there's value in seeing people face to face.
For sure. But I think it's, there's a real advantage to like having some work-life balance. I've got young kids, right? So I got a 9 and a 6-year-old little girl, and they're awesome, and I love spending time with them. But if I don't make a conscious effort to kind of be home, you worked at Chesapeake as well.
Right.
Like, you know what that was like.
Yeah.
It was a real grind, and not that I'm very thankful for my experience there. It taught me a lot to what it's like to kind of grind and get the work done. Like we ran hard and fast and learned a lot over a short period of time, and so I'm super thankful for that. But you are seeing an evolution. Maybe the downside of that is that you're always on.
Yep.
It's kind of the opposite side of that. I do my best on the weekends to kind of leave it alone. My wife likes that too. But it's not uncommon for me on a evening at 7 or 8 o'clock to open up the laptop and do some more work. Like this.
Of course.
It's kind of how life is.
Kind of have to. Last question around just the age of the founders. Are you guys mostly working with like established, you said you hardly do anything pre-seed, but are you still looking to the youth? Are you still focused on like builders or people that are young, whether it be college age, or just kind of these up and coming people that maybe they're on the very cutting edge? Like how much are you paying attention to like the TikTok generation of people that are coming out of school right now? And I ask that as somebody who is tech forward in terms of the media and the things that we're trying to do. I can often sometimes feel behind whenever I hear about what the youth is doing. Do you guys still focus on the youth, or is it mostly on seasoned entrepreneurs?
Yeah, that's a great question, because I just sitting here thinking about it, I was trying to run through. I don't know that I know the ages of all of our guys to know like generationally where they would, guys and gals, where they would fit. I would tell you most of them are probably older than that.
Yeah.
And so I think it goes to some life experience a little bit for us. Like it becomes valuable. They've been through it before.
Sure.
They know like and keep in mind, most of the time we're backing experts in their industry.
Yeah.
And so they've been through the paces. They know exactly what the problems are. Those are the guys we really like to back, frankly, that they worked somewhere else, figured out there's a better way to do this,
Sure.
and then they went out and built it. And so most of ours are probably of an older generation, but a lot of them are trying to be very thoughtful about how they integrate podcast and TikTok and all this stuff.
All the media stuff.
All the media, like, because I think it's challenge. I'm speaking as a 41-year-old male here in Oklahoma City. That it's challenging for me.
Yeah.
I'm never going to do a dance TikTok video.
Yeah, I haven't either yet.
My daughter will probably be all over it, but not something I'll ever do. But I think it's like you got to pay attention to those media pieces, because the numbers are astronomical and the type of revenue some of these companies can drive off of them. The good news is there are, what we see, at least more agency or set of agencies out there that are doing work in these spaces that are becoming industry experts. And, when you're building a social strategy around a company, if it's consumer facing especially, you better have some type of social media presence towards that company. For us, it's not as important. Not that it's not important, it's just not a big item, because most of our companies are B2B. We're really focused on the B2B marketplace.
That's where I've struggled with it, is that I see the value of the broad reach with social media. And, I talked a little bit before this about Twitter and just some things that I've experimented with and grown an audience. And I do see that the B2B aspect, it's harder to harness the power of social media. I mean, maybe like LinkedIn is pretty good to reach other companies, but if you're just posting ads, it kind of gets lost in the shuffle. Ideally you could create some content that other businesses see value in. And there's been times when we'll talk about negotiating a midstream contract or something, and I'm like, no one's going to care about this. And then sure enough, someone's like, hey, I saw that thing you did about negotiating this midstream contract. We actually had that same problem. Could you guys help us?
Yep.
That's happened. That's more rare. I think that it's
probably defining where your customer is too.
Right.
Like I've seen your stuff primarily on LinkedIn.
Yeah. And Twitter. Yeah.
Yeah. But it probably primarily shows you where I'm engaging at. And so probably a demographic there that makes sense for your marketplace.
I've often thought and wished that I had something to promote that was a lot broader, because sometimes I'll get a big reach and then I'm like, yeah, but I can't do. A lot of the businesses that we have are pretty niche.
Yeah.
So I was just interested, do your companies, are they focused on the media stuff at all? Since it is all B2B, is it more just like industry? Where do the marketing dollars go, I guess, in terms of where do they think about getting the best impact and the best ROI and, spending the money on the advertising, on the marketing, and on the outreach? Yeah.
Most of ours, I would tell you today, is a little more process driven around a, driven sales team, B2B sales team. Right. And so not so much on the social media aspects, just because of where their customer sits and who's making the buying, who the buyer is at the end of the day. But we made some investments alongside other great branding companies. And so those are the times where you lean into where, where you're at least acknowledging, where your expertise is not.
Yeah.
And then you find partners that can help drive that forward. And we feel pretty blessed to have some partners that can do that.
Yeah, that's awesome.
Yeah.
Last thing, how can listeners support or get involved or find you, or just anything for people that are interested in learning more about what you guys do, whether it be an investor or a team that's looking to get funding?
Yeah. So, the easy is just, website, victorumcapital.com. You can click on any of our pictures there and email us directly. Would love to hear from new companies or people that are interested in, where we're investing and how we're investing. At the end of the day, we want more people to join us. We want people to get some exposure. This is not your 401k money, to be fair. And I think that's one thing, this is not something where you're committing every dollar. This is a small allocation in your, individual portfolio. And if you're one of the listeners that I imagine you have here that has primarily been focused around the oil and gas commodity business,
sure,
you understand the ebbs and flows of what that is. My outreach to you would be, hey, let's think about diversifying your allocation a little bit across maybe some technology where you don't have quite the exposure to the commodity risk that you carry. And so, I'd encourage people to join us, to reach out. Would love to continue the conversations either online or wherever. Happy to meet.
Sweet. James, thanks for coming and doing it. I love doing them in the studio. It's hard to get guests in OKC. We talked not too long ago, and I knew what you guys were doing, so I was excited to get you in here and doing it. I appreciate you coming on.
Yeah, man, this has been fun. Thank you.
All right.
See you.
Thanks, guys.